Hey there, and welcome to Real Investment News. I'm Mike O'Neill. Well, we hate to be the ones to say I told you so, but here we go. In his weekend reading blog, Lance Roberts proclaims that tax reform doing exactly what we expected. There were two big selling points used for President Trump's tax reform bill. The first, that tax cuts will lead to a huge ramp up in earnings. Well, that hasn't happened. First of all, Wall Street has a tendency to overestimate earnings. Last October, the estimate for the last quarter of 2017 was $116.50, and for the first quarter of this year, it was $119.76. But the reality? Well, in the Q4, it was off by $9.66, and for the first quarter of this year, it was off by $7.15. Now, take a look at this chart. Lance points out that the reported earnings estimates, that solid red line, is predicted to climb steadily, but by the time we get to the third quarter of this year, well, we're still at the same level of January of last year. And as we just said, Wall Street always overestimates the earnings by about 33% on average. But let's say those estimates are correct. Well, the S&P has already priced in the rate of growth. As a matter of fact, the increase in percentage on the S&P is already twice as high as the rate of growth for the EPS. The second selling point, corporations are going to use tax cuts to hire employees and boost wages. Well, you know where this is going. We did get a lot of headlines from companies bragging about the bonuses. The Americans for Tax Reform website says the count is now up to 377 companies who have announced some kind of bonuses because of the tax reform bill. But, and I've pointed this out twice before, Walmart gave out bonuses of up to $1,000 and raised its starting wage to $11 an hour. That cost them $700 million. But they spent $4 billion on stock buybacks. In fact, just the first 2 months of this year, companies have announced more than $173 billion in stock buybacks, and at this rate, it could top $1 trillion by the end of this year, the most ever in history. Stock buybacks are good at boosting stock prices and dividends and making shareholders happy and improving the executives' bottom lines, but that is not helping employees or improving the companies themselves. So yeah, tax cuts are doing exactly what we said they would do. The top 1% are getting richer, while the middle class, well, don't forget to pay the taxes on that $1,000 bonus. You can take a closer look at all of these charts and Lance's analysis at realinvestmentadvice.com. In the meantime, please remember to follow us on Facebook and Twitter and YouTube. Watch our past reports at realinvestmentnews.com. I'm Mike O'Neill. Thank you very much for watching.